There you go. More new highs indicated. Join us now, Ed Yardeni, president of Yardeni Research. He came swaggering in here like he knows everything. You've been...
No, I don't.
You've been right, though.
Thank you.
You are welcome. Last time you were on, you went from, I think you went from
7,700 to 8,250.
To what?
8,250.
By
the end of the year, and 10,000 by the end of the decade.
Tom Lee recently has said best couple of years that we're going to see in the stock market in his lifetime, or something similar to that. You've got some non-obvious reasons to make that case, don't you?
Well, I think it's actually the obvious reason, and that
earnings?
It's earnings. Yeah, I've been recently talking about FOMO versus FEMO. FEMO's fabulous earnings momentum, and that's really what's been driving the market, not FOMO, not fear of missing out.
So it almost makes sense. I guess when I said not obvious, I meant given what's right in your face that causes people to think, oh my God,
of course,
stocks are over, all the things that make you
worry about.
Yeah. The people that consistently build the wall of worry that the market climbs.
Yeah, I think what's been largely missed is the resilience of the economy. The economy is kind of like Rodney Dangerfield. It's been getting no respect.
And then we got to figure out what is responsible for that. We know it's the greatest economy in the world. Yeah. It always will, always has been. But then what else? Is it AI? Is it
I think
deregulation?
I think, it was about in 2024 that everybody was talking about American exceptionalism, and then that the whole thesis kind of fizzled out in 2025. But we have amazing capital markets. There's a tremendous amount of capital available for innovation. That's driving the technology revolution. The technology revolution is driving productivity, and productivity is fairy dust. It makes everything better in the economy, better growth, lower inflation, real wages go up, and profits are great.
I mean, you look at the rest of the world, and all you got to do is look at the leading companies in any industry, especially technology.
Right, they're here.
Over the last even 20 years, even back to Google or... I mean, even anything involving the internet, and then you got Amazon, then you got social media, and you got Meta, and now you've got AI. It's all happening. Biotechnology or pharmaceuticals.
That's a huge
It's all here.
Yeah, it's all here.
Why?
Well, I think this is still a very entrepreneurial society. There's a lot of people that are constantly looking at opportunities to come up with better products, better services, cheaper, better, and we do creative destruction better than anybody else. Famous economist way back when, by the name of Joseph Schumpeter, said that that's what entrepreneurs do.
He said a lot of smart things, especially about the permanent leisure class, which ends up being so well off that they think they don't need capitalism and don't realize capitalism is where it came from. There are people pointing out that in terms of risk premiums, or premia, that we're at a point similar even to the bubble, though. There is froth, there is call buying, there may be some disconnect between fundamentals and the lofty levels.
Well, we've already had a few crashes, right? I mean, we had a crash at the beginning of last year. It turned out to be a great buying opportunity. We had a crash in March, turned out to be a great buying opportunity. I mean, the market...
The best one was in the pandemic at 2,300 on the S&P.
Yeah, I mean, that was an amazing buying opportunity. So I think there's a tremendous amount of wealth in the U.S. on a global basis that wants to invest in the U.S. And I think there's earnings is what's driving it all.
The thing that the unknown that we don't know, the unknown unknown. That's a crazy term, but what is it? What's looming that could cause a big problem?
I think it's on the geopolitical.
Nuclear holocaust is always...
Yeah, I mean, unknowns are unknown. But known unknowns, we know about the possibility that China will invade Taiwan. I mean, that would be a calamity. But it would be a calamity for China, too, which is why...
$150 oil might be a calamity, or not so.
Well, I think oil prices are going to be coming down.
You do?
Yeah. Look, geopolitical crises have traditionally been, almost always been, great buying opportunities. Market figured it out this time around as well. The shooting was still going on right through the end of March. Right. March 30th, we made a low, and it's been up and away since then.
I'm just trying to think of a perfect storm issues with China, issues that bogged down in Iran, higher interest rates, $40 trillion of debt.
Yeah.
I can paint a scary picture if you want.
Well, the debt story has been around for a long, long time. I've been doing this for over 45 years, and the perceptions that debt is going to create a calamity just hasn't happened. One of these days, it's conceivable, but the reality is the Treasury and the Fed can always finagle things. That's what happened in 2023. The Treasury said, okay, we'll issue more bills and it won't increase the amount of bond issuance. No, we've, I'll worry about the debt when my friends
interest rates might be going up. The Fed might be raising rates.
Well, look, the thing is, as long as somebody's buying the debt, that's also the flip side of debt is wealth. A lot of people that are very concerned about debt are saying, I don't want to be in the stock market. And then you ask them, so where do you want to be? They say, oh, I want to be in 10-year treasuries. I said, how does that make any sense?